Hi guys, welcome to this Money Control live stream. You're watching IPO Watch with me, Nandita Khemka. A slew of IPOs have hit the Lal Street today, and one of them being Anand Rathi Share and Stock Brokers. This is the second IPO from the Anand Rathi stable. We are all aware that Anand Rathi Wealth is already listed and it has given 1000% returns since 2021, since it listed. But of course, Anand Rathi Share and Stock Brokers, 745 crore rupee IPO has opened up for subscription. The company has already raised 220 crore rupees from its anchor investors. Some of the names, marquee names being Morgan Stanley India Investment Fund, PineBridge Global Funds, domestic names like HDFC Mutual Fund, Kotak Mutual Fund, Quant Mutual Funds. A lot of marquee names have participated in this issue via the anchor book. But of course, we have the management right here in our studios with us, Pradeep Gupta, who is the MD and CEO of the company. Let's ask him whether or not he's confident enough that Anand Rathi Share and Stock Brokers can replicate the same success story that Anand Rathi Wealth has had since its listing. Mr. Gupta, tell us, are you confident enough? And secondly, don't you think you're a bit late for your stock market debut?
Thank you, Nandita, for this nice question. First of all, good morning to all of you and good morning to all the viewers of Money Control. No, we are completely confident because of a simple reason. Our belief and our strategies are always clear. We believe that unless we are not going to work in the interest of investors to whom, or our customers to whom we are servicing, I think it's not going to happen. So in every single venture, every single company of our group, I think they are looking at investors first approach, investor-centric approach. And over here again, we are doing little differently. We are not looking at an investor from a different point of view, but looking at whatever investment needs of a specific investor should be met over here. And as a result, all investment products, which is be it equity, commodity, currency, or probably mutual fund, AIF, corporate bonds, structured products. So these kind of products which are really required for an investor, and they are constantly generating their AUM around these products, and they want to invest in it from a long-term perspective is something which we are presenting to our investors. So I personally believe this company is also going to grow over a period of time.
Sure, let's hope so. But let's delve into a little more details in terms of the proceeds and how it will be utilized and also your financials. Let me start with the very important part. Roughly 550 crore rupees of the IPO proceeds would go towards margin trading facility. How large is your MTF book today, and post issue, what is the size that you're expecting?
Yeah. So Nandita, overall we are raising about 745 crore. Out of that, 550 crore is purely for our working capital requirement. And out of that working capital requirement, about around 300 crore kind of a book is going to go probably for a margin funding side.
Okay.
Right. Now, margin trading funding is something which we are providing to our customer to increase their return on investments, because this book is purely for those customers who are dealing in cash market and trying to increase and expand their return on investments. So we are not providing any over leveraging to any of our investor. If you really glance through our book size, so about 75% book stays below 1 crore. Okay. So it's well spread.
Okay.
Similarly, if you really look at, from a regulator perspective, there are about 1,900 stocks against which margin trading funding book can be provided. We have proved now that list out of our experience and out of our understanding on those stocks to 900 stocks. And if you again look at the book size, it's about 75% book stays in Nifty 500 stock.
Okay.
So that's how well spread and well maintained. And as a result, we don't have any delinquencies in this particular book since inception. And we are not allowing investor to take extra leverage or over leverage on any of his stock or overall in his account. So that's how we are managing and maintaining. So far this margin trading book is concerned, is constantly going to grow, and this money what we are raising is largely going towards margin trading funding book. And we personally believe there are inherent requirement, inherent demand is already available. If you really glance through our overall customer base, out of our active customer base in broking space, about 8 to 9% customer book, people are only have been able to utilize this book. And why it is happening? Because of paucity of funds. So this company requires funds, and as a result, we find that this IPO is going to help us in growing our book faster.
So tell me, what part of your business is towards F&O? Why I ask you this is because, of course, the tightened regulations by SEBI. They are, of course, looking at doing away with weekly expiry, and discount brokers, will be the most impacted. But you, as a traditional broker, what kind of an impact would you have, and what is your exposure in overall equity derivative trading?
So I'll give you a little bit philosophical answer, and then probably address the answer which you really want to have it on derivative side. See, basically, as a strategy and as a philosophy, we said we are going to address the investment need of a customer and try to constantly give those kind of a product which will keep on looking at investors' investable surplus, and we try to increase the pie of investable surplus of those customers with us. So we are always focused towards AUM side rather than number of investor side. And similarly, the moment you are having a different strategy, you have to constantly look that your customer stickiness should be constantly stay with us, and investors should generate certain amount of return on their investments, and as a result you are also increasing the pie of that investment surpluses of that investor with us. Right. So we have got broking as in delivery and non-broking as in delivery. So broking, which is cash market and derivative market. In derivative you have commodity, currency and F&O. When you are talking about non-broking, you have two kind of a revenue stream. One is non-broking side, and one is basically margin trading funding book. Right. Now, non-broking mein you are marketing, or you are probably providing all kind of investable products, investment products, which is PMS, mutual fund, AIF, corporate bonds, fixed deposits, so on and so forth. Similarly, on margin trading book, through margin trading book, you are providing those investors a little bit leverage to increase their ROI. So that's how our book is. So my non-broking book is constantly generating yield, right? A fixed kind of a yield, right? And this is an AUM kind, annuity kind of a revenue which is coming to the company. So far, my broking book is, again, you have a split, as I said, cash market and derivative market. So my revenue mix over there in cash and derivative is 50-50. 50% is coming from cash market and 50% derivative, which includes commodity, currency and derivative. Now, answering your question, because of such a smaller portion, total, I mean, if you really see total overall revenue is split 60% in broking, 40% non-broking, and out of that 60%, 50% in cash market and 50% in derivative, and within that also another. So about in total overall revenue, my derivative positions is about 20 to 25%.
Okay.
So very, very less impact is going to happen if anything goes wrong in a derivative side. And the second thing is, we are not really looking at, market turnover as our revenue stream. We are not looking at, and probably in a race where we are trying to increase, our market share in turnover side.
Okay.
Right. What we are looking at, how we can expand and increase the AUM of a specific investors. So you will see my active customer base is constantly growing between 18 to 19% year-on-year basis, but my AUM is growing about 30 to 35% or sometimes 40% year-on-year basis, and that's what we are trying to manage and maintain.
Sure, that's a very self-explanatory or well-explained answer. But in terms of your revenue mix, you said 60% broking, 40% non-broking, of course, that's annuity, etc. But 60% broking, you think, I mean, it's of course vulnerable to market volatility. So will the revenue mix change going forward?
Yeah, so that's the overall plan. How we can increase this first broking versus non-broking, which is a main part, should reach to a 50% level. And that's the reason this IPO is, that's where we can probably provide certain amount of margin trading, which is already available, lots of requirement already available. If you really see our active customer base, about 8 to 9, in broking side, about 8 to 9% customer base is being able to get margin trading facility from us. So there is inherent internal enough demand is also available.
Headroom for growth.
Absolutely room for growth over there. And for that you need funding and financing. For that you need finance,
Yeah.
and that's the reason this fundraise is being there.
Sure.
Because all are primary going into a company for the growth of this company, and we are constantly looking at. Similarly, if you really look at our distribution side, our AUM is constantly growing, as I said, about 35 to 40%. I mean, as on March 25, our total overall AUM was about 6,500 crore. Out of that, in mutual fund, about 5,000 crore. And this is also going on a constant basis. So this book constantly growing at 30 to 35%, 40% year on year basis is going to expand my annuity income,
Yeah.
and will keep constantly, aloof from myself or this company
Yeah.
from a market volatility.
Yeah,
And
yeah.
that's the whole plan is.
Sure.
We are trying and planning to reach to a 50% kind of a revenue ratio between broking and non-broking.
50-50.
So that your dependency is going to be less on, you are going to be less volatile than anyone else in the marketplace.
Sure, got your point. Let's talk about some financials then. Revenue growth has been at 34% CAGR, compounded annual growth rate between FY23 and FY25. The market industry is expected to grow 16 to 18% through FY28. So, what kind of revenue growth are you envisaging? I know you can't share, but would you be able to maintain this revenue run rate going forward, or even better it for that matter?
So obviously, I think the whole endeavor is to probably create this kind of a growth and at least maintain the growth despite the market volatility, which is going to impact on the revenue growth side.
Yeah.
So our first endeavor is to constantly maintain the pace of a growth what you have achieved so far, and obviously improvise, constant improvisation, because lots of things are happening. For example, digitization is happening, and we are already there in that digital space. Constantly investments is there. We are also constantly looking at various different novel ideas which can probably from time to time help our customer base. And if you really look at probably glance through, I think the approach, the way we are trying to see, we are trying to address the investment need of a specific segment of customer, as we are dealing with almost all category of segment, from retail to M&I, HNI to corporate to NRI and to institutional. So every single segment required a definite different kind of a requirement, need and assistance and guidance, and that's what we have created, and we are constantly improvising that so that we can improvise ourselves and we can probably increase our base over there.
Okay, got your point. How are you placed in terms of competition with discount brokers, because they are online, using tech and everything? How are you guys leveraging tech to your advantage?
So we are definitely there on a tech platform. We're a delivery in broking side and non-broking side both. App is available, and on web platform is also available, and constantly improving those deliveries. But what is differentiating from those discount broking houses versus us? There is a very clear cut understanding with the discount broking houses. What they are doing, they are constantly looking at volume driven approach. They are trying to work on a gaining the market share in a total turnover, and as a result they are constantly investing and constantly looking at larger customer acquisition, and as a result their CAC is high, and as a result obviously as a delivery, their delivery focus was and is towards high value trading or probably derivative trading side, and that's where their bread and butter is. Whereas we are completely
AUM
different. It's AUM driven, looking at investment needs, looking and providing support and guidance towards investment cycles. So you are largely driven towards one specific customer, and their customer stickiness is being required. So if you really see my customer base or stickiness of our customer, 5-year customer is 50%, 3-year plus customer is 60%. So by and large you will find there are customers staying with us more than 10 years, 15 years. If you really see age group, our 30-year plus kind of a customer base is about 85%. Okay. And if you compare most of these discount broking houses or new age technology broking houses who are largely driven towards the trading side, the customer life cycle over there remain at between probably 6 months to maximum 2.5 years. As a result, they have to constantly reach to a newer customer.
Stickiness is missing out there.
Absolutely right. And that's the major differentiating factor, and that's what we are trying to create.
Tell us something about drivers of profitability, because I think even your profits have grown at a very healthy pace of 65-66%, if I'm not
Absolutely,
mistaken.
in the past 30 years.
So, are the drivers in place? How are you planning to better it going forward? If you can share it for the benefit of your prospective shareholders.
Yeah, see, we are constantly trying to grow. As I said, one is total overall business model where we are trying to expand our annuity income to a level so that there is no impact of volatility or market volatility comes, and you have a predictable growth over a period of time in this company, and consistency in revenue growth should be achieved and can be achieved.
Sure.
That's the first thing. So obviously customer base, distribution network, and to the existing customer base, how we can constantly provide various product coming from distribution network is something which is happening and which is constantly happening. And the second thing, on equity delivery side and equity side, investment side, what is happening, since we are also on a tech platform, you will find that in March 25 itself, about 37% broking revenue is coming from our tech platform, which is customers directly executing those trends.
Okay.
So that much kind of a bandwidth of our RMs and dealers are getting vacated, and they started concentrating in terms of towards getting more and more customers to the kitty and addressing the needs of investment to those customers and trying to pitch the other products to these same customers. And that's where we have started leveraging already. And as I said, constantly we have all the channels available. One direct channel through our branch network. We have about 90 branches.
Yeah, I also want to ask you about your branch expansion plans going forward.
Right. So we have 90 branches in 54 cities.
Yeah.
About 1150 to 1200 business partners spread in total overall presence of ours in 300 cities. Right. So both of them are constantly expanding. Having said, in our branch network, as a strategy, what we said, we would like to keep our branch network at least on state capital and larger city, and that's where our presence is there. We are further strengthening those presences, and we constantly look at wherever viability of those branches are there in terms of manpower, in terms of operational efficiencies. We are going and setting up our branches, but they are in limited. Okay. But how we are expanding our branch network is strengthening those branch network by incorporating more and more people over there.
Okay.
So recruiting more and more RM who can interact with our customer base, trying to onboard them and trying to service them on investment products. So that's how we are expanding over there.
Okay.
In terms of business partners, they are stationed, and our philosophy is through them we can reach to tier 2, tier 3 and tier 4 cities. And that's where they are looking at district places and other larger city of smaller town, and we are spreading them through that network.
Okay.
Right. So if you really look at it, constantly about 125 net addition in business partner is also happening. So we are expanding in that network also.
All right.
Apart from strengthening our technology or digital deliveries through which a customer can come, view our product basket, try to execute trades and constantly work independently if he can, and if not, there is an assistance and guidance support through these two networks.
All right, got it. And I wanted to ask you one question regarding your debt to equity ratio as well. That's 1.8, a little elevated compared to your other peers.
Yeah.
Any plans of bringing it down, and how do you plan to fund it? If you can throw some light on that as well.
Absolutely. If you really look at it, our debt equity is 1.8, and this is because of a simple reason. This whole business requires lots of capital. Right? It's becoming, from past 7 to 8 years, it is becoming more and more capital intensive, and by and large you have to provide, apart from providing funding, providing margining to a stock exchange, getting limits from there, you have to also provide margin trading funding facility to your customer, and that's where you need these funds. So this whole debt is being raised for executing those kind of activities within the company. Obviously, we are very clear in our mind that our debt equity ratio should not go beyond 2.
Sure.
And to keep that in limit, this raise is there.
Yeah.
That's the reason this company is raising these funds, so that you can control and keep in place and try to address, and your growth do not hamper over a period of time. To be really frank with you, this debt equity can go further. There is no one. Yeah, I mean, you will find the cases in our competition itself, where debt equity ratio is about 3 or 4 also. And there are cases who have got enough amount of capital or funds available with them because they have raised funds long back in the past and they are utilizing that funding book towards it.
Yeah.
So their debt equity is a little low because they do have spare capital or spare capacity of funds available with them. But with our company, in this company, that's what is required, and that's the reason we have come out with this particular fundraiser.
Okay, one last question then. You have established peers like Motilal Oswal and etc. in the market. How long do you think you'll take to at least play catch up to those players who've already been in the market for quite some time?
Yeah.
So any such long-term vision that you would like to share?
I think obviously our endeavor is going to be always try to stay ahead of the curve, try to probably figure out amongst top 5 and then top 3, and we'll keep on doing that. But I think over here I would like to say this company, which is Anand Rathi Share and Stock Broking Company, is largely focused towards broking and distribution side. And you have to, and one has to compare likewise company which are available in this space and where do they stand. I mean, many company which we are talking, whether it is Motilal, IFL or anyone else, there are various different business vertical also combinedly available in the same company. Right.
Got it.
For example, their AMC businesses, they do have AMC businesses. Their wealth management businesses, they do have wealth management businesses within the same company, which is in a listed space.
Yeah.
What we have done and we are doing differently is we remain focused in every single activity which we are doing by segregating those companies and
unlocking value.
And because we believe that by keeping that separately, the customer segment is different, the requirement need of customer is different. This is our belief, and that's what we are trying to segregate every single delivery, every single company, and keeping in all these businesses in a separate company, right? As vis-a-vis, keeping all the activities in the same company. There are few companies who are having NBFC in the same company.
Yeah.
Our NBFC is also again separately. So I think we have to compare likewise and try to see in likewise businesses where do we stand, and then probably
fair point, Mr. Gupta. But since your company also caters to the market, I can't leave you without asking you a question about the market. It's been fairly good over the last few days, although we've underperformed global peers quite substantially over the last 1 year. But given the fact that there are quite a few developments in the market recently in terms of positive development, we had GST rejig, we had S&P upgrade, GDP growth was good, but then we have some headwinds as well. The US-India tariff issue still hangs in balance. You have the H1B crackdown that of course saw IT stocks take it on the chin. Although some analysts are saying that fears are a little overstated. What are your thoughts from here? Do you still think there are chances of the Nifty retesting record levels? Because we're not very far from there. We've staged a good comeback. But for the rest of the year, how would you see the markets behaving?
See, I think we should not forget this basic principle that this market works on three things. One is fundamental, one is pure sentimental, and third is liquidity.
Yeah.
We have seen past 5 years of market trend, right? Constantly one-sided kind of a market we have seen bearing last almost 8 months or a year, right? So I think obviously you can't predict and you can't expect the same kind of a growth which you have seen in the past 4 to 5 years. The similar kind of a trend is going to emerge. But having said that, if you really look at the constant growth and compare the country's GDP growth and economic growth, it's much better, much faster with the peer countries or even overall world context if you really start comparing yourself. So I'm completely bullish on a fundamental basis from a long-term perspective.
Okay.
Intermittently, I mean, there are going to be a shadow coming from a sentimental point of view because liquidity is also enough in the system.
Yeah.
So there are two factors which are positive. One is fundamental and liquidity. Sentimentals will keep on overpowering from a short-term perspective. So whenever you will find there are going to be a negative sentiments coming and overpowering over the positive sentiment, you will start seeing certain amount of volatility, certain amount of risk or certain amount of subduedness in the marketplace. But over a period of time, I think they are going to float away. So I'm completely certain and bullish because I have got a strong conviction that 3 year to 5 year down the line, there is going to be a static and constant growth is going to happen in this country based on their own inherent strength, and the way GDP is growing, the way regulations are happening, the way whole corporate structure is happening, the way regulators are looking at this market.
Sure. Thanks a lot for that insight. Mr. Gupta, I would like to wish you all the best for your listing next week, and hope you can replicate the same story as Anand Rathi Wealth as well.
We'll try our level best. Thank you.
Thanks a lot for joining us.
Thank you.
Well, with that, we've come to the end of this edition of IPO Watch. Of course, stay tuned for closing bell. That will be coming up at 3:30 p.m. It's a goodbye from me and the entire team. Thanks for watching.